back to the Real Estate Huddle, and we are going to be talking today about how financial decisions on insurance in the boardroom are actually killing real estate deals today. And we've seen this happen over and over and over again. And so we've brought in an awesome insurance expert here. Dustin, you want to tell us a little bit about yourself? We appreciate you being here with us and kind of how you've been involved in this whole process and what you've seen.
Yeah, absolutely. No, appreciate having me in. Again, Dustin Nichols. I'm with Lakeside Insurance. We're located up in Broomfield, Colorado, family-owned operation. I've been with Lakeside for, we're going on 13 years now. Been in the insurance industry for 15, Lakeside for 12, and this is my baby. I have a real estate background as well, which I don't know if I mentioned that to you at all, Landon, when we originally spoke, but I do have a real estate background. I did real estate for a couple years, and so I love helping this industry. I have a large property book, which is filled with, apartments, commercial buildings, which we call lesser's risks. So basically commercial building that's rented out, and then also condo and townhome associations. So I've built that book over the last few years. Over, COVID time frame is kind of when it popped. I think that's kind of when we saw the real estate market go crazy, and the insurance side of things also went crazy. And a lot of these, we'll call them condo associations, townhome associations, since that's our focal point today, really struggled. We were seeing increases of, 200, 300, 400% on these premiums. So that's my goal today, is just bring awareness to property managers, to board members, as you're buying into these associations, as you own a unit, whether it's an investment deal or you're occupying it, is how can you be utilizing the board and creating the best profitable option when it comes to the insurance side and protecting your asset. So awesome. That's why I'm here. I appreciate you having me.
Yeah, no, we thought it was a good idea for you to come out because we deal with the surface level, right, of helping a condo buyer. Most of the time, a condo buyer's buying their first property, right? So they're getting like all this new information, and they're trying to like navigate decisions. And if they're not working with a real estate agent that really understands this stuff, and with an insurance broker that really understands this stuff, they can get into a situation that's just a bad situation, right? Yeah. So that's what we pride ourselves in. I know you guys take great care in what you do, and the associations, and also just the individuals that you help out to make sure that we protect people and mitigate their risk, right? Yeah. For the most part, we don't want to get someone into a situation that they can't get out of without severe loss. And so that's the whole key right now. And I think the overall scope of this message is not like, don't buy a condo, don't buy a townhome, right? Like, I think there's still some great buys out there and some very worthwhile purchases of townhomes and condos. I think that the thing is, you just got to know what you're dealing with. You got to know your risk that you're getting into, and you got to know the good ones from the bad ones, right? And so we'll talk about that today.
Yeah, no, and I think that brings up a good point. Is I think from a realtor standpoint and a consumer standpoint, is I think insurance used to be an afterthought. Like, hey, we went through all the subjectivities of the timeline of the contract, checked all those boxes off. All right, now let's dive into insurance, check off those boxes. And, 10, 15 years ago, that's how it used to be. It was just an easy checkbox. We're good to go. They have insurance, whatever. And now it's, you almost have to start that process at the very beginning, because you don't want to kill a deal because of insurance 25 days down into the timeline. So, it protects everybody at the end of the day to start that process as soon as possible.
Yeah. And there's a difference, right? We want to just differentiate the two, because we've got standard homeowners insurance, which is like your property insurance that you carry individually for the property. And then you've got your master HOA policy, right? Which is what the commercial policy, basically, that a multi-unit HOA that has, multiple condos. I'm sure you've got some on your books that are hundreds,
shell,
right?
Yeah. So it's covering the shell. So that versus your HO6, your homeowner's policy, condo policy, that's your interior. That's as a unit owner, that's your responsibility. But here we're talking about the shell.
Two separate things, but why is the shell policy for the HOA that's completely out of my decision making if I'm a condo buyer? Why is that important to that condo buyer?
Yeah, so a couple things that go into that. One, we're in Colorado, right? What the biggest peril that we have in Colorado is hail. And so that's where we're seeing a lot of these premiums jump, is because these insurance companies in Colorado specifically have hemorrhaged money from hail claims. And so, they're, again, like I was saying, we saw 200, 300, 400% increases over the last several years on these shells. And it was because they lost so much money. So they had to almost maximize these premiums to a level of, all right, we're finally not losing money on these, and now we can kind of come back down to the marketplace. And now we're actually seeing single-digit increases, and in some cases, large decreases on a lot of those condo associations that just increased big time, the 300 or 400%.
That's good.
Yeah. So it's definitely coming back down, but the shell is the most important piece because that's where the large claims happen.
Yeah. So, well, let's just walk through that, right? So hail comes to a community, right, that has, let's say, 100 units, okay? And then what are the implications that happen then if they have an insurance policy that's in place, right? But let's say that insurance policy has a deductible, which is a term we're all kind of familiar with, right? Because we have insurance policies, whether you're a renter or a homeowner, or a car owner, you understand what a deductible is, the amount that you're going to have to cough up and pay, right, in the event of a claim. And so if that comes up in one of these and you experience a bad hail claim, what are they looking at, and what's the implication of that for the actual homeowners that are there? Yeah,
absolutely. So the big buzzword over the last several years, specifically in Colorado, is a wind hail deductible. And this is a percentage deductible. So, it got introduced into the marketplace, and it was around 1%, started creeping up to 2%. And single-family homes, you'll still see some of them have a 0.5%, 1%. But when we're talking specifically condo and townhome associations, you're seeing minimum 5%. Yeah. Very rarely, if it's not a hail-prone area, maybe you can get a 3%. But for the most part, we're talking 5%.
Okay, and we got to pause there.
Yes.
We have to define what percentage we're talking about, right? So this is a misconception that even I've had, right? So I've always understood that it was as a percentage of the actual damage, like the hail claim damage. Correct. Say you had $300,000 worth of damage on the building, then I'm getting assessed, 5% of that. Yep. That's not accurate.
That's not the case.
That's not what we're looking at here. So what is the percentage actually of?
Yep. So it's actually of the full building value, so the insured value. So, you had mentioned a $300,000 roof claim. Let's say that's on a $2 million let's say it's on a $2 million building. That 5% deductible is actually of the $2 million, not the $300,000 claim. So you're actually looking at a $100,000 deductible on that versus, in your example, a $15,000 deductible.
Major difference.
It's a big difference,
right? And so, so what's happening right behind the scenes is HOA is choosing an insurance policy to cover their shell policy, to cover their exterior from wind and hail, and they are making decisions based on their reserves that they have.
Correct.
Right? And if they're low on reserves, then they're going to look for a discounted policy that's going to be a little better for the numbers up front, but it's going to set them up for a lot of risk.
Correct.
And all of their owners for a lot of risk if there is a hail event, which it's not a slight chance in Colorado. Hail happens every 3 years, like a major hailstorm.
It will happen.
Right?
It will happen.
It's not a matter of if,
that's
it's a matter
the scary
of when.
thing.
Correct.
And who's making these decisions sometimes isn't like the most bright, educated people in the room, and not to be like disrespectful to HOA boards, because they're sacrificing their time, and they're really
volunteers.
I think a lot of them have good intentions. But some aren't making maybe the best decision for the community. They're trying to survive financially. Right?
And that's what they're trying to do, right? They're trying to keep the reserves and HOA costs as low as possible. Yeah. So that's when they're winning, is when the HOA fees are as low as possible. Yeah. That's when they've done their job.
Yeah. That's when people gripe.
Yeah, that's what they're measured on, and that's the personal attachment that people have to their performance.
You got it.
So. Yeah. Well, and it's funny because us as realtors, we look at an HOA that has a $500 or more HOA payment, and we're like, oh, man, that looks mismanaged.
Yeah.
But in some cases, that might be an HOA that's trying to do the right thing, and they have a great policy that's covering them and reducing the risk.
Yep.
And so owners need to understand that high HOA doesn't necessarily mean that it's mismanaged. It may be that they're doing the right thing to help that community go in the right direction.
Yep. And a lot of times that is what could be the case is they've been hit hard in the past. So they got bad advice, 3 or 4 years ago, had a hail claim, and then just dumped their entire reserves. So that's where, okay, yeah, let's match up what the HOA fee is currently, and let's look at the finances as well. Let's see what their reserves are at, what do they have set aside for certain things like a hailstorm, and that's when it's looking at the insurance and the finances, and a properly managed HOA is a huge deal when it comes to holding the value of the individual units.
Yeah.
So I think that's one. It's important for people to get involved with their HOA. I know that's tough. I'm part of an HOA myself, and me personally, I don't want anything to do with it because I see the horror stories. But it is, especially with a condo and townhome association, it's important to get involved because it's your asset at the end of the day that you're trying to protect. And a lot of these are, some younger first-time home buyers. Like, this is a good stepping stone to their real estate path, and you got to protect that as much as possible.
Yeah.
So just being educated, get involved.
And if you're not involved and you're not willing to, then you're deferring to somebody else, right? That you may or may not trust. Johnny and Joey and Barbara.
Yeah.
Are there any other tips you would give to buyers from an insurance standpoint of how to protect themselves, or questions they should be asking, I guess, from someone who just has no idea, I guess?
So I think first and foremost is, get involved with the insurance part as soon as possible, because we had mentioned the wind hail deductible. I see a lot of boards right now that have a 10% wind hail deductible, and we can kind of dive in that in a second and revisit this. But that's a real big no-no when it comes to the lending space, and so we'll touch into that. But get to know what the insurance policy is, the master policy, what that all entails, and then start shopping your policy as soon as possible too. An HO6, which is a condo policy, used to be very easy to get, very cheap. It's not the cheapest policy anymore to get, but it's still a requirement per your loan, per the HOA. But there's a coverage in there called loss assessment. And you want to make sure that your carrier that you're shopping with, most people just go to their current policy, their current company that has their auto or renters or the prior homeowners, and checks it out with them. Make sure they have that loss assessment coverage.
Well, let's define that, right?
Yep.
So that people understand, because HO6, we're speaking Chinese, right?
Yeah,
to most people. And so if it's, so the way that we would explain that is, let's say I'm a condo buyer, I buy my house, I pay my property insurance, right? That covers the inside of my building in most cases, right? If I have an insurance rider on my policy, which is called an HO6 rider, right, that allows you to have coverage for a special assessment, which is when an HOA, because of that shell policy deductible that they have, they say, we don't have enough in reserve, so we need to collect this much money from each homeowner to cover our deductible, to help us cover it. And everyone usually in the condo community is like, well, why didn't you guys plan better for this?
Correct.
Why didn't you guys, it's all your fault. And they throw it at the HOA board when that happens. But there's one thing that you can do to prevent that from happening to you and protect yourself, is to have this HO6 rider or policy, the addition to your policy, basically to your homeowner's insurance, that would cover you on a special assessment. And it has a deductible that's kind of like an auto loan or auto insurance. That's like $500, $1,000 that would help you in that situation. And so what you're saying is anybody can get an HO6 in any community,
Correct.
Basically, but the loss assessment part of the HO6, meaning like the amount that they would cover, that is diminishing.
Correct. So you nailed it. So your master policy, you have a hailstorm, okay, comes through, damages all the roofs have to be replaced.
Yep.
You have, the master policy has a 5% wind hail deductible, which we just learned is 5% of the total value. Essentially at 5%, most roofs there's going to be no coverage under the master policy.
Yep.
So then the board then has to assess each unit owner a certain amount based on what the total cost of that roof is going to be. Okay, so let's use simple math. It's a $100,000 roof. There's 10 unit owners. Each unit owner is going to get a $10,000 loss assessment.
Yeah.
Okay, and so because it is what we call a quote unquote covered loss, it's a hail loss, all right, and it's not just wear and tear, it's a hail loss. you can use your HO6 policy, your condo policy, in that loss assessment coverage to cover your portion of the loss assessment. And that's where it's important to get.
Yeah.
That coverage, though, is becoming really tough to get on higher limits. It used to be everybody could get $50,000 loss assessment, and now we're starting to see carriers limit it to more 10,000, 15,000 max.
Yeah.
So if you did get a $25,000 loss assessment and you have a $10,000 loss assessment coverage, you're going to have to, fork up the other 10 grand
Yep.
on that loss assessment out of pocket.
Which is a big blow for
Big
most
blow.
condo owners,
Yep.
right? That
Yep.
are living. I mean,
Probably talking
more than
refinance.
50% of Americans are living paycheck to paycheck.
Correct.
Right.
Yeah,
So,
they can't-
especially in this market.
Yep.
They can't handle a $7 a month emergency or $700 emergency in cash.
Right.
Yeah.
So you're talking $10,000.
10 grand from something that's out of your control, it feels like, is a very tough thing.
Correct.
And so make it within your control and get that policy
Absolutely.
right, or the HO6. Remember, if you're going to remember anything from this, if you're a homeowner of a condo or
Yes.
going to be, get that HO6 policy so that you can make sure to stay up to speed on that.
Is there any restrictions on an HO6 for condo versus townhome?
Nope. So, it's really important that you read and understand your bylaws, right? And that's part of your guys' jobs too, as you're kind of going through the contract, is understanding, all right, how do these bylaws read? Are we studs in? Are we drywall in? Is it, hey, we have the full responsibility of the building as a unit owner? Like, what is our responsibility as
Yeah.
the unit owner?
Is sewer line covered? Is it not?
Correct.
To what extent? Yeah.
You got it. So understanding that full scope as you're going in, because that changes things. It changes what type of policy you need. And so if we're talking a condo, most times it's an HO6. If we're talking a townhome, I'm starting to see more and more townhomes transition, maybe some older townhomes transition to, hey, we're not drywall in or studs in now. It's, hey, we've changed our bylaws, and it's going to be everybody just covers their unit.
And it's a party wall agreement.
And it's party wall agreement.
Yeah.
You got it.
Meaning you've got rules of what happens, if in the event of a hailstorm and stuff, and there's basically rules defining how you respect each other's units between the walls.
Yep.
But there's not any coverage on the exterior from a governing HOA
Correct.
anymore. Every owner's responsible for their section of the roof, even though the units are tied together.
Yeah.
Right. So you would just replace your roof on your roof line, basically.
Yeah.
Yeah.
Yeah. And as an insurance guy, that scares the living daylights out of me.
Yeah, 4 different roofers doing one quad.
Well, not only that, but I'm trusting my neighbor
Yeah.
to have adequate amount of coverage too.
Yeah.
Or to have policy all in general. Like I understand the bylaws
That's
require you to have it.
Yeah.
But I can tell you how many boards are probably requesting what we call certificates of insurance or evidence of insurance from all their unit owners to show that they do have insurance in place.
Yeah.
It's probably none.
And
they can't manage that.
Our policies, are you seeing homeowners policies like on interiors, are they higher because of the party wall? Well, obviously they are, because it's not just the interior,
Correct.
right?
They're covering
But
it.
is it higher in that case than a single family home would be?
No, not necessarily. It's going to
Okay.
be about the same.
Okay.
It'll
Same.
honestly be relatively based on the size of the building, but
Yeah.
it should be the same.
Okay, that's interesting.
Yeah.
Because it used to be that was part of your HOA dues covered the exterior of the building,
Correct.
so your insurance would be cheaper.
Yep.
Now that's going away.
Well,
Now that-
some associations are going away from it
Okay.
because those master policies got so expensive.
Okay. No,
Like
that's good.
it was an insane amount where these
Yeah.
associations couldn't even afford it.
Right.
Yep. No, that's good to know.
And
Yeah.
condos can't really do that because you'd be cutting up. Like,
Correct, yeah.
And one has a roof, one doesn't because they're below it.
Exactly.
You know,
I have
so
no idea how you'd set it up.
You
I don't think
couldn't
you could.
do that on a condo situation, but on townhomes you can because
Yeah.
it's like a row house
Yeah.
scenario, and so that's. But the HOAs tend to be much lower because they're not covering all of that,
The insurance
and they don't have to have that master policy.
Correct.
Right. So it's just each individual has their own homeowner's insurance that covers exterior and interior, but your HOA is only maybe $80 to $120 a month in most cases, compared to $400 or $500 in
Correct.
a lot of cases. So
Your insurance will not be that much higher, so you're
Yeah.
actually getting, and it's something you can shop around and control. So
and we're seeing that on almost every like new construction row house setup.
Yeah.
Right, where you've got like 4 or 5 in a row. They're doing that same deal with a party wall instead of a major association involved. So that's
Well,
pretty
yeah, it's
cool.
easier to do on the starting.
yeah,
Start
instead of going
that
back and retroactively trying to
Yeah.
fix it.
Yeah.
Dustin, I've had a question that has been brought up with special assessment or the 5% to 10% deductible, getting an insurance policy to cover that gap.
Let's go back to that.
What was told to me is it needed to be a lot and block legal description versus not having it. That is where the subject to availability is based on the legal description.
In regards to
It being financeable.
Yeah, if you could get like a policy, let's say the HOA has a 10% insurance deductible, but FHA guidelines are saying 5%.
Okay.
You can get an insurance policy to cover the gap between those two.
Yep. So we call that a wind hail deductible buyback.
Okay.
So we have them. I can tell you, I haven't sold a single one.
Okay.
It doesn't make sense financially to take the higher deductible on the main policy and then buy a second policy to bring that down.
Just from a cost standpoint.
From a cost standpoint, and I'll kind of explain what that cost is. Essentially, at the end of the day, what you're betting on with that policy is that you're going to have a hail loss within 10 years.
Okay.
So that's how the premium is broken out. The difference between the 10% and the 5%, and then you divide that by 10.
Yeah.
And that's essentially how you get your annual premium on that. And so if you think you're going to have a claim, like if your track record shows, hey, we're getting a hail claim every 3 years, and you can't find an insurance company to get you a 5% wind hail deductible, then yes, let's go ahead and get you a buy down policy, a buyback policy to get that gap. I haven't seen it where an insurance company is not willing to give a 5% wind hail.
Okay.
So going from 10 to 5, you should always be able to do that on the main policy.
Okay.
Now going from a 5 to a 1, because hey, we don't have reserves set up, or if I'm an association, I don't have enough set up in the reserves to cover that large of a deductible, and I'm definitely not going to assess my unit owners X amount of dollars. So we'd rather take the guaranteed upfront cost, since we know what that cost is going to be, to go from a 5% to a 1% wind hail deductible. Okay, and then then you get that separate policy to essentially pay for 4% of that deductible in the event of a claim.
Where I ran into that was someone wanted a Fannie Mae or Freddie Mac loan.
Yep.
And the requirements for that loan said the HOA and insurance policy had to have a 5% deductible.
Yep.
And then but the HOA had a 10%. So by the HOA doing that, it negated the normal ability for most lenders to be able to approve.
Correct.
70% of the ability for conventional financing for folks.
Yep.
So we were able to skirt around that by them getting an insurance policy to cover the difference.
Yep.
So.
Yeah, especially after the policy's in place.
Yep.
Then you could do that. And I've had those conversations before is, hey, let's just get you a buy down policy to get you in compliance. Because that is one of the largest issues that I'm seeing with associations that I get introduced to is they do have that 10% wind hail deductible. And a lot of times I'm having those conversations at their renewal. So it's easy for me to go ahead and just make that change as soon as possible for them on the next policy.
Yeah.
Okay.
But yeah, if you're in the middle of a term and you're doing a deal and you're 6 months away from renewal or just renewed a couple months ago, it's a good solution to utilize is that buy down policy.
Got it. Okay, that's interesting to know.
Yeah.
And the typical, just kind of surface level here, if a buyer is getting under contract on a property, and if the listing agent hasn't done their homework, they don't know what that master policy is, and the buyer, likewise has not really looked into that and called the HOA and found out, then they go under contract. The lender ends up reviewing the master policy, and then the deductible, that 10% exceeds the guideline amount for the loan, right? In most cases for conventional and FHA financing in a lot of cases.
Yep.
And so because Freddie Mac and Fannie Mae are the two big secondary mortgage rule makers, right? That just establish the rules for government loans, for all types of government loans, VA, FHA, and also conventional financing. And so things have to abide by their guidelines. And if they don't, loan gets denied. And that's what would happen in this scenario. And the buyer walks away, terminates the contract because they can't obtain financing. And then the listing becomes stigmatized as nasty word.
Correct.
Unwarrantable. Right? And we hate that word. Like,
Say that again.
Everybody here,
What was that word?
unwarrantable. And it's like, if you live in a condo association that now becomes unwarrantable, that could mean like your values go down, tremendously, right? Not a small impact, but like now all of a sudden, nobody that's getting traditional like financing, that's 80% of the public that would normally get that type of financing can qualify for your house. So they would have to get either a portfolio loan through like a Vectra Bank or First Bank that has like 10% down or more. That's the only way they would get it done, or cash, right? And so you can imagine how small the buying pool is of people that are going to go that route rather than just doing the traditional financing that they've been approved for.
Okay.
And so now they're just totally looking elsewhere. They're not looking at your community anymore. So that's the impact that this can have, just the decisions that are being made. And going back to your point of, you should get involved in your HOA board.
Yeah.
I've never been more motivated to do that.
Yeah.
I don't want to, but I've never been more motivated to do that just thinking about this, because I have a couple of these. So this is really enlightening. I appreciate, all the knowledge there. And so I think that's one call to action, right?
Yeah.
Is like, get to know what's going on with
Absolutely.
your HOA board. If you don't want to be involved and on the board, at least get to know like if you should be or not.
Yeah.
Are they making sound decisions or not?
Correct.
Right.
Get the meeting minutes, read through them, understand what's happening.
Absolutely.
And
Absolutely.
if you've got, the HOA Karen that's really, really pushing for something that nobody else wants, like maybe it's time for you to get involved.
Maybe worth copying and pasting and submitting to ChatGPT and just say, ChatGPT, is my HOA being run properly?
Yep.
They might be able to tell you, right? And save you a bunch of time.
Absolutely.
So if you really don't want to get involved.
Well, and Landon, to go back to your point there as well, if you're talking about, let's call that a mismanagement of as a board, right? So going back to your scenario on, hey, we had a 10% wind hail deductible because that's what we thought was the best policy because it's the cheapest. But now, your community's becoming stigmatized as
Unwarrantable.
Yeah, exactly. And so these property values are now dropping.
Yep.
You as a board are responsible for that. And so now it's one extra layer of what we call directors and officers policy or directors and officers coverage that hopefully most associations have in place. If you don't have that in place, so if you're joining a board, always make sure they have what we call a D&O policy, a directors and officers. That's protecting you. You're a volunteer at the end of the day. You want to make sure you have protection because you're doing this on your free time, okay? So you want to make sure you're protected personally. Because in that situation, if it were me, I'd be going after my board for a mismanagement of insurance, and now all of our values, my largest asset is now depreciated to who knows what, and it was all because you guys made a decision to save a buck come the insurance renewal. And so, that's another thing is if you're getting involved, one, make sure you have a directors and officer policy because that's what's going to protect the board at the end of the day if you guys do make a mistake.
Interesting.
Yeah.
So that another expense.
Another
for
expense
the board.
and that's a small
But
expense.
necessary.
Very necessary,
Yeah.
but small expense.
Right. Because there's a lot of people pointing fingers at HOA boards.
You got it. Yeah.
So,
Yeah. You're the first to get blamed.
yeah.
And it might not even be your fault.
That makes sense.
Could be your insurance guy's fault.
Yeah. Yeah. So at the end of the day, when things go wrong, right, on these HOA policies and the deductibles are poorly chosen, they don't just lose value, but they lose the financing flexibility of the buying pool just shrinks tremendously. Absolutely. And then, in insurance nowadays, it's not just a protection thing, but it's access to the market, right? Like you have to kind of start there, right? You have to start with being pre-approved if you're a buyer, but you also have to look at how is this community set up from an HOA master policy, the shell, and also the interior. How much is that going to cost me, right, to insure and make sure that it is insurable and financeable. Those two things are pretty critical. And then, a well-structured master policy and a sound board that's making good decisions is now like a competitive advantage, in the condo world. Yeah. And so if you have that, that's going to be something that will continue to appreciate most likely and continue to do pretty well. So
absolutely
interesting stuff. Well, this is great. Anything else you'd like to add as we close?
No, I think just one other thing I did because it's come up before and it stems from the wind hail deductible.
Yep.
When at all possible, and the phrase that I use is ensuring insurability. So we've been talking about how tough it is to find insurance in Colorado regarding these master policies. So you want to make sure that your community is the most attractive, insurable piece.
Totally.
And by doing that is minimizing small claims.
Yeah.
So eat as many small claims as you can. Don't submit those into your insurance.
Yeah.
You know, the small wind claims, hail claims, small liability claims, specialty liability claims. Keep those off your insurance.
Yeah.
Pay those out of pocket as much as possible. I had an association that did have a 5% wind hail deductible, and it was a $3 million loss. The deductible ended up being about $2.2 million. And so they paid that and then had insurance pay the remainder of the loss, which was $800,000. They couldn't get insurance because they showed a $3 million loss on there, even though they paid the deductible. They showed that loss on their loss runs,
Right.
and they couldn't get insurance.
Which,
And so again,
bites you down the road.
exactly. So
Yeah.
ensure your insurability
Yeah.
in this time in Colorado. Don't make small claims, and that goes out to all consumers.
Yeah.
Right. Don't utilize your insurance on small claims. Utilize it on catastrophic events.
Yeah.
Obviously, there's certain circumstances that you need to use it on, but use it only when you need to.
Yeah. Okay. That's interesting. Well, if you're watching and you're a member of an HOA board, HOA president, or you have some decision-making ability within your HOA and feel like you need to talk to somebody that's very knowledgeable, Dustin Nichols with Lakeside Insurance is who I would absolutely recommend talking to. And we'll put Dustin's info here on the episode below so that it's easily accessible so that people can find you.
Appreciate it.
And then if you're a condo buyer, right, or someone who's looking to get into the market but maybe can't afford a single family home, and you're like, well, we got all these issues going on. How do I mitigate my risk, and how do I get into a good situation? Give us a call. We'll work together with a great insurance agent, with a great lender, to make sure that you get a situation that is a good risk mitigated venture for your first home, and that'll set you up for success in the future and springboard you to maybe your first home, to your next home, to your dream home. And that's how you do it. If you have a setback on your first one, it's really hard to get to the dream home.
Yeah.
It takes a lot longer. So if we can help you on that first one, that could be the most important real estate purchase you'll ever make. So we appreciate you listening, and we'll catch you on the next episode.